Hi everyone, welcome back to BRH. It's just me today. Anand seems to be a little too tired, understandably, because he just came back from Bangalore. So it's just me today, and I want to talk about something which is of a lot of interest, which might be controversial, which Albin may not agree to, though he's off camera looking at me like, what am I going to talk about? Of course, Keshav has no clue what we're talking about. And of course, Anand also may not agree with what I'm saying, which is we always keep saying the market is overpriced, the market is overpriced. And we always keep talking about PE ratio, that you should look at a share's PE ratio before you decide to buy it. The PE ratio is a metric that you should consider. And broadly speaking, so what are the advantages of the PE ratio? The PE ratio is very simple to use, very easy to understand and calculate. Any person with a basic math can calculate the PE because you know the price, you know the earnings. It's very comparable, meaning sector wise, you can look at it, you can look at it company to company, you can analyze it. And it's, of course, very, very popular because of its simplicity to use. PE ratio is widely used in all kinds of markets and everywhere. The limitations of PE: earnings volatility. Your earnings move in real time, while the PE may not be reflecting that. So you have to always be careful. And accounting differences, like me and what got Albin were talking about power grid investment, infra investment, and they were doing something in their accounts in their books which was showing a negative PE, negative earnings because they were doing some imparity they're putting into their books. So because of that, their accounts were showing negativity, though it's not to be true, but it was something they wanted to write off expenses in their accounts. So it showed that you can't rely on PE at that point in time. And of course, growth expectations. And high PE doesn't necessarily mean the company will grow or won't grow. You can't see that and you can't predict that. The PE does not account for that and also doesn't account for debt, which is another major drawback of PE. PE ratio does not tell you how much debt is there and what is the danger of the debt. And sector to sector variation is very huge in PE. You know, something like a cement industry's PE average, historical average, might be very different from something which we look at in the pharma. So these are the main things of PE. So, but what does this mean with Nifty? We always say Nifty is overpriced, Nifty is overpriced. And Anand says this, I've been saying it, and a lot of people have been saying it. So, but if we take it into the PE historically, if we look at it, right now the earnings of Nifty is around 888, is the Nifty's earning. And if Nifty's earning is 888, let me put out the heat index map. This is the Nifty's historic index. If you see here, from 1999 till date, it gives a complete quarter-wise, month-wise PE. So if you look at it, 1999, when we started measuring the Nifty PE, it was at 12.54, going all the way. You can see during the 2008, when the stock market corrected because of the global financial crisis, it dropped down again to 12. Okay, and then if you notice, it went up and went up. Then the pandemic happened. In the pandemic again, it corrected. The PE corrected, and from there it went all the way up to 40. Okay, the average historical average, me and Anand and Albin have always been saying is around 15. So if you see, we have not come near 15 for a very long time. And right now, a lot of people, the bull runners, keep saying we are, very bearish. Me, Anand, and Albin and our team are very bearish, and we keep saying, no, no, the market, you guys are just playing down a market which is doing very well. And they'll use the same graph as in justification, saying at 40 PE, the earnings has caught up to justify this kind of a market. And we are at 22 now, the PE ratio of Nifty. And most bull operators, people are very bullish in this market, will say you should keep the historical average at 20 and not at 15. And if you keep it at 20, we're not very far away from the average. And the market is, they will say the market is not overpriced. And there's a good opportunity to see the market go. Even if you're looking at, let's say, a PE of 30, where they say it will be considered overpriced, they say the market should be near 25. That's why a lot of them say by the time the elections come around, they expect Nifty to go all the way up to 25 or 26 to keep in tandem with what we have seen so far. If you take, it going up to around 30, where it starts heating up and turning red. But if we take what me, Albin, and Anand has been saying, if we keep it at 15, 888, that means the market can come all the way down, which is not even below the average. That will be at 13. And if we take, let's say, 12, a 13, which is below. That's where we sit in bear market. You're talking about the Nifty being at somewhere near 10. That is the range the Nifty can swing. And will it swing? I don't know. Maybe. That's why I pulled this chart out to show you when we get into a bull market, you see the extreme from 2018 to around 2021. It's been in a bull run and it's been completely a chalk big block of red, except for a small patch of green in between. It's completely been in red. And if you see above it, where it has been at a lower valuation, it has been at a lower valuation for a very long time. So a lot of you feel like if we miss an opportunity, we're sitting and saying you're going to correct, you're going to correct. What if we miss this opportunity from 22, it goes up to 35, or 30, which pushes the market all the way up to 25, 26. Then it corrects back to where we are right now. Your argument might be, I might as well have entered the market right now. True. If you believe in this, what people who are very bullish in this market say, you're probably right. You probably see the market go all the way up to 25 by the time election comes. Then you see a strong correction happen and it drops all the way down to 19 again or 18. And you'd be like, see, the correction has come. We missed an opportunity to see a growth of 25, 26. Then we lost this opportunity. We would have probably sold at that point of the election results and booked in a profit and we re-entered the market at 18, 19. Possible. I'm not saying you can't do that. Of course you can. But me, Alvin, and Anand, and Shashwat, and all of us believe differently. We believe in value investing. And if you look at the numbers, when we look at a 10-year stretch, you're going to have a good ample time. Once this correction does come, a huge correction should come. And this correction not only can come in terms of the price, it can come in terms of earnings. This is where Anand has been harping on. He says our earnings are not really very correct. The way we're getting our earnings and way it's being calculated is not correct. He says if you really look at the true earnings, he says it's nowhere near this. Where it says 888 is not our true earnings. So if you really look at our true earnings and you discount all that, we are overstretched. So even if you take an earning correction, let's say of 10%, 888, 10%, you take it out, so it's 88. So that gives you around 799. 799 at 22, we're looking at around 17. Even at 22, it should be 17, where the market should be. So please keep all this in mind. Like I spoke in that other podcast about valuation, you have to look at how you look at the intrinsic value of companies before buying them. You should also look at the stock market's intrinsic value, which is nothing but a composite of all the 50 companies which are there in the index, the composite of their percentages and their intrinsic value if you take and you calculate it, which is just nothing but pure maths, and you take the discount into it, okay, based on overpricing and macroeconomics, and you discount all of it, I do believe you would reach the same place where we are saying this market is overpriced. So this is something which I wanted to share with you guys. Since it was me being alone in the studio today, I thought I'd just pull this out and share this with you. That why we say what we're saying. We're just not people who just constantly go on saying the market isn't bear, the market isn't bear. Yes, the reason why we're saying it, this is what our case is. It is not pure science, like Anand says. This is social science. Meaning, yes, we show numbers and we're showing a heat map and all that, but this is the past. Please always remember this. This is always looking back. All the numbers we're looking, our earnings are all trailing. Our PE is trailing. If you're talking about 6 months ahead, what's going to happen during the elections, none of us can predict. Who's going to win? We can't say. What will happen? We can't say. Even globally, what's going to happen? We cannot predict. So keeping that in mind, this is what has happened in the past, and this is what we have seen. Even when there's global macroeconomic seismic shift happening, we can see what has happened in the Nifty. So it kind of gives us a kind of a rough guide on what to expect. So I hope you understand why we say what we say. And we do encourage you to do your own digging, your own analysis. And do believe me, I'm not like Anand. I don't believe there's nothing wrong in being very bullish. If you're a person who's a risk taker and you're very bullish, of course, you can go ahead and be bullish and take a bet saying you expect the market to go up to 25 and place your stock portfolio according to that. And whichever sectors you do believe which should do well leading up to the elections, you can bet on those sectors and try to book in a profit. Though I will not advise you. This is not my advice. I'm just saying I understand your position. Same way, I just want you to give me that same courtesy and understand my position and understand Alvin's position and why Anand and me say why what we preach. This is why we preach it. This is why these are the numbers we look at to say what we're saying. That being said, a lot of you who follow Anand and been listening to Alvin say, they talk about 20, 30 companies they talk about, and one or two companies go red, though most of them have been staying green. One or two go red, and you guys have been asking Alvin privately, like, why is this one alone red? You realize we're in a bull run. So just saying one red is what the strange thing is. If you see many reds, then okay, there's something to worry about. In a bull run, everything's going to look green. So one red is not too bad. It's still pretty good. Out of 30, 40 companies which is being shared, if one or two are turning red on a day or two, it's okay. You don't need to go crazy about it and freak out about it. Since we're in a bull run, pretty much everything is in the green. I would like to visit the same conversation when the market does turn and there's blood on the street. How many of you are there on the comment section saying, you guys were right, you guys were right? At that point in time, I'm sure a lot of you who feel critical about our bearish attitude would be like, no, you guys could rather be silent at that point in time, which is okay. I get that. Criticizing when you're standing on a higher ground is much easier than criticizing when you're standing on a lower ground. And we have the stomach to take it, so you can give it to us. We love reading your comments. So do put in your comments about this video too down below. I would love to hear what you have to say. And I'll make sure I pull in Anand tomorrow to answer some of your comments about this video. And I'll probably try and get Alvin into so he can also shed some of his light on what he thinks and what his opinions are on this. Anyway, thank you for joining me today on Be Rich. It's a short video. It's not as long as I usually do with you guys. I know I've not pulled in any companies or analyzed any stock. I wanted to talk about the broader market and the PE and the earnings, how it works and how you should look at it. And I'll take all of it with a bag or pinch of salt when you do look at this. Thank you for watching me today on Be Rich. Do subscribe and turn on the bell notification icon and subscribe to the channel as always. And I'll see you on the next one. Bye.
I told you that I will be in Riyadh on the 22nd of September. The event place was not fixed. The team has now decided the event. It's in the Holiday Inn Riyadh. Those who are in and around Riyadh and desirous of meeting me may contact the WhatsApp address below or the email. My team would get in touch with you.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.